It's Adrian Bo, Chief Auctioneer for Ray White Quakers Hill, the Tessalon Group. The 18th and 19th of January were 2 days that have just passed where I conducted auctions for Josh Tessalon's team himself. We do have other auctions coming up for the entire business. However, this weekend was the first round of auctions. Now, throughout Australia, there was only 400 auctions. We conducted 15, so basically occupying 4% of the entire Australian market of auctions this weekend. Now, we were at the very vanguard of the property market in the last 2 days. Let me tell you, we had some outstanding sales, 2 homes in Plumpton, 3 homes actually in Hasslegrove, a home in Dean Park, 1 in Grantham Park, and 1 in Cambridge Gardens, and 1 in Quakers Hill. Now, the 2 standout sales, in my opinion, was Cambridge Gardens, which was a Suburb record, which we just surpassed from the most recent sale in that particular precinct. So an amazing result there. And the other standout was in Quakers Hill, selling for hundreds of thousands of dollars over the reserve price in a street that is incredible and holds many record sales in that particular precinct, being the core market for Josh and his team. Now, in isolation yesterday, we had 90% auction clearance rate, which was absolutely outstanding. And throughout both days, we ended up with 66%, which is well above what the national average auction clearance rate last year was, which was the only metric we can go off given that auctions are only starting this year, and that average clearance rate nationally last year was 53%. So those numbers are certainly well above the national averages. Now, certainly in terms of what the key topics that were brought up today and my key observations in terms of the market. Firstly, that the average number of registered parties was 5 every auction. So some were a lot more and some were slightly less, but 5 on average. So that's a very healthy number in my opinion. There certainly is some confusion amongst buyers about the cash rate and what's that's going to actually do and how that's going to affect the interest rates from the banks. So what we've seen this year as part of major changes from the RBA is 8 meetings only instead of 12 meetings, which I think is quite a positive sign. Otherwise, we're waiting with bated breath monthly on what the cash rate's going to do. So initially, we had a forecast of all the majors suggesting February was going to be when the cash rate will drop. However, they all reforecasted that till May, being after the election. And just this week, there's been some suggestion by the governor, Michelle Bullock, that the next interest rate adjustment could be in a downwards fashion. I don't necessarily agree with that because we do know that the Reserve Bank focus on underlying inflation, not headline inflation, and underlying inflation is still at 3.5%. And as we know, the RBA obsessed are getting that cash rate between the 2 to 3% mark. So I don't see the cash rate dropping until the latter part of the year, or at least until after the election, because it can be quite a political hot potato there. Certainly we had a lot of motivated vendors I noticed in the market today, either because they've purchased or because they're coming off fixed interest rates or because they're looking for a complete lifestyle change. There was certainly also a very sharp dichotomy between the quality of buyers. They were either red hot and ready to purchase because they've sold or they've been underbidders late last year, or we saw a whole bunch of shrinking violets which were very reluctant to bid, and even though they registered. So we found that quite strange. Certainly another observation there was that there is no room to nickel and dime when it comes to presentation and marketing. You will be punished if you don't make recommendations to your seller that the marketing must be absolutely spot on, and quality photos on all the websites, certainly on all social media platforms, boosting and also doing proactive buyer calls as well, and also with the presentation. Rented properties certainly had some issues in terms of reluctancy because of the presentation, and the access wasn't great. So in my opinion, this is not the market to be worried about budgets or about selling properties without giving notice to the tenants. We should be selling properties that are fully styled and either presented well through the owner's furniture and a full marketing campaign. No skimping on that at all. So the other opportunities that we saw in the market today, and what I noticed, especially through my research, is that the residential property market in Australia now has surpassed $11 trillion in total value. Now, so we're sitting at $11.1 trillion in total value, and that surpasses the combined value of the other asset classes, which is superannuation, commercial property, and the entire ASX. So that gives confidence to everyone, or it certainly should do, in investing in residential real estate. The Home Value Index by CoreLogic did suggest that in December last year, there was just a slight reduction in national values of 0.1%. That's negligible in my opinion, because that's the first reduction we've seen in over 2 years. In over 2 years, we've had only adjustments in a positive fashion and in an increase in national values. So also, the property management team at Ray White Quakers Hill, led by Chloe and Anthony, particularly in the leasing department. The lease of the week, 9 Dungara Crescent in Stanhope Gardens, that was leased for $875, an outstanding result there for a 5-bedroom home with double parking and 3 bathrooms. So lovely to report to you at the very first auction wrap for the year. Looking forward to seeing you next week, and always live with virtue, and God bless.